Hey there traders, this is Shane from tradingplan.com, and this video here I just want to put this one together simply because if you go to any forum you see a lot of trading strategies out there, and a lot of them they're using moving averages and stochastics and MACD, and sometimes their whole screen looks like just a big jumble of spaghetti. And I just want to show you that you don't always need to clutter your chart up with indicators. Frankly, what leads indicators, right? Price has to lead an indicator, or the indicator won't print. So if you can learn how to trade off of price, you'd be, I think anyways, ahead of the game. And you know what? Let me just cover this trade here, and I think you'll get what I'm trying to say here. This is the Aussie yen. This is a daily chart, and up here, this line up here, I guess it's magenta, I guess. This is an area where it was sold at. As you see, there's a sell right there. And right now this trade is up about 148 pips roughly, 146. And this trade was taken off of pure price action. And first, let me just show you what I was looking at here. First off, we have, this is the weekly chart. And you can see that the week, a nice move up here from this low up here. And if you look where price is, it's pretty high up in this curve, right, of this whole this chart, this weekly chart. And in this area here is where price just plummeted from low to high about 1,600 pips. So seeing that drop down the daily chart, and I want to see what was in the area. And what I had was price dropped. You see it came down all this way down here, rallies back up in this area, and then drops. So we have a rally, price based, right? The buyers and sellers fight it out, and sellers win. Market falls, and it falls pretty strong. It's telling you that there's a pretty big imbalance of buyers and sellers up there. So when price returns this level, I'm looking for a short, and sure enough, price returns this area up here, and price drops. Now you see these wicks up here. I got inside these wicks on a lower time frame, basically looking for the same setup where price rallied up, base, and then just fell. And the problem with this trade, the only problem with this trade, is these wicks. The wicks are pretty high, and I had to put my stop around those. And I would have loved, if it was a bit cleaner of a turn right here, because you see the market kept on rallying up to about 84.70, and then finally broke down. So it got up pretty high, but you have to respect these, right? These areas are pretty key. We see these kind of wicks on candles, so just keep that in mind. So I had to go around that, and it made me have a bit bigger risk than I would have liked on this trade. Now the profit target is down around this area right here. Probably looking around 81.55, around this area right here, to get out, or be prepared to get out. And this is I don't trade off of MetaTrader. The charts are pretty decent actually, but a family member, they piggyback some of my trades I take, and this is their order up here that's sold off. And let me just bring something up here. I just want to make sure that this is this is an active trade. All the the important details are taken out because that's not really material to this whole setup. But you can see where the stop loss is and what the price was to go short. Bring up something here, right here. This is my own. Right now the trade's up 152 pips. So like I said, about 81.55 for the take profit, which is going to be pretty much where this big green candle broke above this area right here. But we'll see what happens as the trade gets down. So this is just just to highlight that if you can find these kind of areas, and they're all over the place, right? You're looking for these areas where price really rallied out of certain areas, like down here, clearly, nice rally area, and you expect something to happen if the market ever gets down here. It may not, or it will, but not for a little while. And that's the thing when you're trading these higher time frames. Don't think you're going to be sitting here pushing the buttons, every 5 seconds, because it's just not going to happen. This trade took a while to set up, and it was pretty much around this area right here that I noticed be a nice little sell area. So you can see it was a nice sell-off today, and like I said, pure price action. If you can, get a handle on that and be kind of strict, because it's a very discretionary system, right? A lot of people, no disrespect to them, but they, discretion is just not for them. They need something A plus B plus C, you know what I'm saying, to actually put their money on the line. They don't, I guess, trust themselves or whatever. But and this market has got some nice way to drop here. It's kind of free falling. The only thing, you see these lines were up here, and I had a bit of a concern because price had rallied up, a bit of a sell-off, and then did rally up again, and I just wanted to be on my toes around this area right here, just to see what the market was going to do, and clearly just busted right through it today. And it's got a bit of a drop here to go on the daily down to here. Probably won't look at the weekly again. We'll just let the market's going to do what's going to do. And that's it. Now, as for managing this trade, there's a couple of things you can do. You can move your stop to break even, or you can scale out a portion of your position. This is what's great, with spot FX. You can trade minis, for a couple of bucks a point. You can trade standard lots, but if you're going to want to scale out, you want to make sure you're using multiples of minis. So if I choose to do that, when they get down 2 to 1, we're looking at about an 80 risk, so about 160 pips, which isn't too far away. Scale out a portion of the trade, bank some profit, so if the market does come around and go back up and stop out, at least you're protected in that regard. And that's just if you're not around, right? Who knows, where these markets are. Something can happen, the market can just shoot up. But if that happens, I'll get to scale some out and see what happens. But in the meantime, I like to see if it get down to this area right here. If the market bases for a little while, and then drops, be a nice little spot to put your stop. What I mean by that, let's say the market starts doing this, all right, and then drops south from here. Right above there would be a nice little area to put your stop if that occurs. Or if this gets really hard when you're looking at trading on larger time frames, you're going to have to live through some retracements. So if it's bottoms here and rallies up, you're going to have to live through that. And if it breaks south, be a nice little swing area to put your stop as well. All right. But that's entirely up to you how you manage your trades. But the whole point of this video was not to talk about that, not talk about how much money you can make on this, but just that you don't need the indicators. You can learn how to trade just using pure price action, and that's it. It does become a little bit more discretionary, but the markets are what they are. Anyways, let's wrap it up. Thank you for watching. Talk soon.